Welcome to Second Take, the show that focuses on the issues behind the news. South Africa, along with many other countries, is reviewing its investment policies. Terence Creamer joins me to discuss some of the latest thinking in this regard. Terence, welcome to Second Take. Why is South Africa undertaking this review?
Well, we've looked at our bilateral investment treaties that we signed since 1994. And these were something that we did as we re-entered the community of nations post-apartheid. And we signed double taxation agreements and bilateral investment agreements. But these were probably undertaken in quite a lot of haste, and we didn't really have a strategy behind these. So there was a review undertaken, and it seems that the outcome is that the benefits or the flows to South Africa have been ambiguous at best, is the sort of outcome of the review. And we now have to look at maybe possibly revising the way we enter these bilateral investment treaties with other countries. And we are actually in a period of moratorium where we won't be signing any new bilateral investment treaties or BRTs. Unless there's a really compelling case to do that. And it was really found that there were flows and there has been investment, but that there was also potential to restrict South Africa's transformational and developmental objectives in some of the agreements we have signed. And therefore the review comes at a time when some of these are up for renegotiation or termination. So we'll either be looking to terminate or renegotiate with a lot of our partners.
The review is taking place against a backdrop of introspection globally. Why is that the case?
Yes, I think the global financial and our economic crisis, we had the first phase really starting in 2008, and we're into the sort of second phases of that right now, has got governments looking at a whole issue of regulation and liberalisation and the whole issue of the financialisation of the world. And I think there's been a lot of introspection generally in governments about foreign direct investment. Foreign direct investment's often held up, as Professor Gabriel Palmer once put it, as the Mother Teresa of investment. But when people have really looked at it again, they've seen that, as we did with our review, that these things, the traffic is not always two-way. Sometimes the benefits really go to the multinationals more than to the host country. So there's this view that maybe the liberalisation of the 90s didn't really yield the results that many countries had hoped from their FDI flows. But now we also have the United Nations Conference on Trade and Investment looking at this issue, UNCTAD, and they've also put a framework in terms of how do we integrate sustainable development principles into investment. So saying, look, FDI is important, it has potential to bring benefits to a country, but those don't necessarily flow automatically. The governments need to have some sort of regulatory frameworks around these, have some goals that they want to achieve to really enter into these agreements with foreign companies, many of which are even larger than the companies that are hosting them in terms of their revenues that they earn on a more equal footing, and with a more clear agenda in terms of what you want to get out of that foreign direct investment. And it comes at a time when we're in a phase of recovering from the pullback in foreign direct investment that took place post 2008. And we saw last year South Africa recovered to around $6 billion, $5.8 billion from the 1.2 shock of the year before. And we've also looked at sub-Saharan Africa recovering to over $37 billion from the period of pullback. Africa as a whole is still in a period of decline because of what was happening in North Africa with Arab Spring and things that took place there. There was a lot of withdrawal. But I think generally there's FDI flows are starting again. There's pent-up money on balance sheets around the world, and there's a view that this will start happening again. But governments are going to enter these with their eyes wide open.
It seems particular attention is being given to efforts linking access to South Africa's mineral assets to its industrialization ambitions.
Yes, I think that's the new shift that's taking place as we see what they call a new generation of BRTs emerging. South Africa is trying to construct what they call a new competitive advantage around access to its mineral assets. So we have this mineral assets. It's not doing hell of a well at the moment because of other reasons, but we do have this huge treasure trove of resources in South Africa. But our ambition is diversification of this economy, not just to become a commodity economy, a mining economy, moving dirt from our ground and allowing, say, China or India to industrialize off that dirt. So it's a contentious issue, and Some people think that maybe we should be focusing on really growing the mining industry just in terms of the dirt digging approach, as Australia has done. But the policy approach that the ANC government is taking is very much, and it's outlined in the Sims document, is very much to use the mineral resources more as an industrialization diversification tool. So we're seeing there's a view that's has been taken to the trade and industry ministers of Africa, that Africa as a whole needs to think a bit more strategically around access to its mineral resources. So when the Chinas and the Indias come, as well as the traditional Western investors, that there's not just the investment and the development of the properties and the infrastructure to take the product out of the continent, but also an approach that says, how do we use this to create industrialization and services industries, and actually to have a much more holistic approach to the minerals, so that we don't look back in a few years' time and when the commodity cycle's ended and have only these pits and not an industrial and services economy left to speak of. It's a very difficult area, and it's one that's not going to be easily solved in the short term. But I think the view of South African government is to try and do this not just as bilaterally, which they are doing with the Chinese when they enter into these discussions. They talk beneficiation, but also to try and take it to a SADC level, or even to a bigger continental level, so that Africa has a common view that we're not just going to be dirt diggers, but we're going to be trying to use this mineral resource, this asset, as a way to stimulate industrialization. I think easier said than done.
Terence, thank you very much. That is the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis.